Ladies and gentlemen, good day and welcome to Godawari Power and Ispat Limited Q4 FY22 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors. Thank you and over to you, ma'am.
Thank you, Peter. Good morning, everybody, and welcome to Godawari Power and Ispat Limited earnings call to discuss the Q4 FY22 results. We have on the call Mr. B.L. Agarwal, Managing Director, Mr. Abhishek Agarwal, Executive Director, Mr. Siddharth Agarwal, Executive Director, and Mr. Dinesh Gandhi, Executive Director. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Dinesh Gandhi to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Sana. Good morning, ladies and gentlemen, and thank you for joining the earnings calls today for the Q4 and FY22. I trust you have had a look at the earnings presentation uploaded on the exchanges and the company website. I will briefly discuss the results and other business development, and then we'll open the house for Q&A. As you are all aware, FY22 was a landmark year in the history of GPIL. We have achieved many strategic milestones during the year. Just to name, GPIL had a record-breaking financial performance, substantially higher and highest ever revenue, EBITDA and PAT. The consolidated revenue increased to 5,399 crore, EBITDA increased to 1,864 crore, which is 36% and 64% higher respectively. The consolidated PAT more than doubled to 1,403 crores from 627 crore, an increase of 136% YOY. Even on quarterly basis, PAT from continuing operations attributable to the owners of the company increased by 24%. The company has achieved net debt-free status on a standalone balance sheet in Q1 FY22 on a consolidated basis in Q4 FY22. The company is net cash positive as of 31st of March and as of the day. Consequently, the pledge on promoter shareholding was fully extinguished and reduced to zero in April 2022 from the level of 32%, at the end of the last financial year. The company has divested its entire 100% shareholding in non-core business of solar thermal power housed in Godawari Green Energy and earned a net profit of 98 crore on its investment, which is reflected as an exceptional item in our results. The company has started manufacturing high-grade pellet during the year, which commands the higher price in market by about 1,500 rupees a ton over the commercial grade of the pellet. The company has started supplying pellet to large steel companies in domestic market as well as started exports of the same. The company has taken a step forward to consolidate the operations related to iron and steel business in the group, and the same is being consolidated under GPIL and accordingly increase the stake to 76% in HFL. Going forward, company plans to consolidate remaining investments in Hira Ferro and Alok Ferroalloy. Further moving on the consolidation, the board has approved acquisition of 25 megawatt thermal power plant of Jagdamba Power on slump sale basis at a lump sum consideration of 70 crore. The transaction is expected to be completed by June end. This transaction is value accretive as GPIL needs the power and the cost of power on a longer term basis, which will be much competitive as compared to the grid power. The 25 megawatt power project is also critical for value addition business. Otherwise, we cannot move the volume on the grid power alone. Finally, the board has declared the final dividend of 140% on expanded share capital, consequent upon a split of equity shares and issue of bonus share during the year in the ratio of 1:1. Coming on the operational performance, I'm happy to report that GPIL has achieved highest production volume in iron ore mining, iron ore pellet and ferroalloys business. All of them are up 36, 6 and 14% respectively on YOY basis. The production volumes of the value-added product like sponge iron billet in Q4 was lower on account of production quantity reaching the full EC limit. And therefore we had to suspend the production of sponge iron, and which resulted into lower wastage recovery power generation and consequently the lower production of steel billet. On a YOY basis, the sales of iron ore pellet and sponge iron were up 3 and 21% respectively. The sale of billet and HB wire reduced by 33 and 64%. The lower volume of billet and wire was on account of strategic shift of the higher volume of sales of sponge iron and wire rod on account of better profitability as compared to the value addition margin. Realizations, if compared annually on all products, have shown great performance due to better demand conditions in domestic and global market. The pellet realizations was much higher in the first half of the year, and the value-added business had a better realization in the second half. As compared to FY21, average realization of iron plate or in sponge iron increased 50, 44 and 54% respectively. Even on quarterly basis, Q4, our iron ore pellet realization and sponge iron realization increased by 10% and 8% quarter-on-quarter basis. I will now briefly touch upon the growth outlook and the initiatives taken by the company in this regard. As you are aware, we are focusing on reducing carbon footprint by setting up 3 captive solar power projects with a capacity of 155 MW. These projects are not only environment friendly, but also expected to save a substantial cost for the company by replacing the grid power. The construction of the projects are progressing well. As regards the 70 MW Ranjangaon project of GPIL is fully ready and awaiting synchronization with the grid, and expect to start generation very soon, maybe in a couple of days. The other 2 projects are expected to be commissioned by end of Q3 FY22. Apart from this, company already generates 42 MW captive power from wastage recovery, 20 MW biomass power in GPIL and 8 MW biomass power in HFL, Hirabaran, that is. We'll continue to focus on our competitive advantage. Our earlier proposal of setting up HR and CR mill is dropped in view of substantially higher capital investment originally envisaged by the company. Our focus will now be on intermediate product like pellet, pig iron and billet. We are working on the final product details and will be announced in due course with capital investment required. The company is aiming to set up 1 million ton greenfield pig iron plant. There is a good demand of pellet in our local markets. The company is also planning to set up a lower width strip mill at its existing location, and therefore company has kept on hold the expansion capacity in the steel billet. The final details about the change in plan are being worked out and will be announced with Q1 results. Our iron ore mines have a long life of 35 years. I'm happy to report that the reserves in our iron ore mining has substantially increased consequent upon the additional drilling taken up by the company during the year, and now we have established that the reserves are to the extent of 165 million tons both the mine as compared to earlier estimate of 35 to 40 million tons. We are now moving ahead with the increasing the EC limit for our iron ore mining capacity from 3 million ton to 5 million ton, and eventually we will increase it to 9 million ton depending upon the future growth plans of the company. The capex guidance for FY23 is around 500 crores. As we have mentioned, our capex will be primarily funded through the internal accruals. The details of the capex is given in our presentation. As regards the guidance on the production volume in FY23, we expect to produce about 2.7 to 2.9 million ton of iron ore and about 2.4 million ton of pellets in FY23. The company is now 100% captive in meeting its iron ore requirement. We will maintain focus on high-grade pellet and intermediate product. Company is better placed compared to the other players in view of captive iron ore resources, which leads to cost saving, and high-grade pellets in which we realize higher prices. Coming on the market outlook, on the international side, the iron ore market is in slightly deficit in Q4 FY22 and production disruption. Russia and Ukraine, war disrupted the supply of iron ore, supply of steel and raw material, thereby increasing the demand of iron ore in Europe and Asia. Iron ore prices in Q4 were range bound and are expected to stay in the range of 120 to 100 in the rest of the year. The demand and consumption of steel and other commodities in China is subdued due to havoc created by the COVID and the lockdown. Expectation that the Chinese market will recover if the lockdowns are expected to ease and government will provide required stimulus. I've just seen in media report that Chinese government has announced a stimulus package of 300 billion yuan, although the reports are not yet confirmed, but this is what is floating in the social media. Coming on the domestic iron ore, as you are all aware, government has recently levied an export duty on iron ore. Iron ore fines from 0 to 30%, 0/30%. That is iron ore fines and lumps to 50%. And pellet, which was having nil export duty, has been subject to now export duty of 45%. Finished steel products and semi-finished finished steel products, the export duty is levied at 15%. This is likely to definitely put pressure on the domestic iron ore and the pellet prices and also the finished steel prices. The prices are expected to be close to the export parity prices based on the international demand supply. NMDC has already reduced the iron ore prices by 715 rupees a ton few days ago. Going forward, the price dynamics of iron ore pellet will depend on the impact of export duty and demand supply scenario in both domestic and international prices. Some support will come from the increased cost curve post introduction of the auction of iron ore mines. Under given circumstances, the markets are expected to be normalized over the next couple of days. We remain conscious of the situation and watching the emerging market conditions, which will drive the profitability of the company going forward. Thank you, and now we can open the floor for the question answer. Over to you.
Thank
Peter.
you very much.
Yeah.
We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Jatin D with Kotak. Please go ahead.
Good morning, sir, and thank you for the opportunity. I just wanted to understand the overall, the view of the company on this export side, because we are one of the largest exporter of pellet, and with this 50% export tax, how do you see the pricing moving in the domestic market and the impact on the overall performance of the company?
See, it is very difficult to quantify on the profitability of the company at this stage, but definitely the 45% duty wherein India has an export of a surplus of iron ore as well as iron ore pellet both. India was exporting close to about 20 million ton of iron ore and about 15 to 20 million ton of iron ore pellet in the global markets. Now, this is definitely going to put in the pressure. As I said in my opening remarks, we are, watching the situation. But we expect that the prices should, for a higher grade pellet, we should command better price of 1,500 rupees a ton. And not only in export, we had reduced the export in the second half of the last financial year and have started supplying the high grade pellet even to the large steel manufacturing companies in India. And partially pellet we have captive consumption and partially we sell it in the local market. But the pricing trend will be able to come to know only in next few days, because everybody is shocked with the kind of decision which has been taken and trying to assess the situation.
No, just to add what Dinesh just said, with the coking coal prices, still being on very high side. So our USP of, the high grade pellet we produce of 65, which alumina is below 1%. So we have been able to tap the domestic market where Tata Steel, JSPL, all these big buyers who operate a big blast furnace have been using our high-grade pellets from last few months. Rather, Tata Steel has been buying us some, every month. So we are confident with a bigger chunk of production being on the high-grade side, we should be able to, neutralize some level of, price drop because of the export ban, rather the duty on the export side.
And sir, and since the duty has come with the immediate effect, so we will be having some contracts which will have been lined up to be executed in this quarter. So have we executed fully, or we will be taking a hit on the current quarter's volume as well in the export market?
No. So see, as you always maintain, a book order of almost, 4 to 6 weeks. So this quarter, there will not be any impact because we are already supplying our maximum volume is going to domestic market. So this quarter, there will not be much impact of the export market. There was one shipment we were supposed to go end of June. So we are talking to the buyer to amicably find a solution so that long-term perspective the relation doesn't get spoiled. And that particular volume will be substituted by supplying the domestic market. So this quarter we don't see very big impact happening on the pellet prices and the impact on the financial side.
Okay. Thank you. I'll come back in a few again.
Thank you. Our next question is from the line of Kunal Motisha with Reliance Securities. Please go ahead.
Good morning, sir. Firstly, congratulations on the great performance in FY22, and thank you for the detailed presentation. Sir, could you quantify the export percentage in 4Q and FY22 or volume or something as a percentage of total sales?
FY22 will be closer to 30-35%. And Q4, Abhishek, you have readily the quantity available, export, how many consignments?
We were doing about one shipment every month. Since we were supplying the domestic market, so we reduced the volume in the export side, and we were doing one shipment of 55 kg every month.
Okay.
Yeah, that's it. So
okay.
The export volume has continually gone down compared to previous quarters.
Okay, got it. And sir, also, how much would the realization gap be between domestic and exports?
No, so we were supplying at the same levels which were supplying for export for our high-grade pellets.
Okay, so there is no gap as such.
So there was no gap as such because we were selling the product domestically and export at the same levels. So that if the export market was going up, so domestic prices were automatically going up. The domestic prices were going up, so export was going down. So subsequently, the domestic prices went down. So both were in tandem.
Okay, understood.
Yeah.
And sir, you guided us 2.4 million tons for FY23. So I mean, this is obviously the rated capacity of yours. So are you confident that without exports, would you achieve this? Until when do you expect this export duty to be in place?
See, wish we had an answer for the whether duty is going to be reversed. But we are hopeful that this is a short-term measure to control the prices because everybody knows the inflation is very high. The infra projects were on a standstill because of the prices. TMT being sold at 70,000 plus. So this was a measure taken by the Indian government to probably control the inflation. So hopefully this is a short-term measure, not a long-term. We have to wait and watch. And in terms of the production volume being sold, we are confident we'll be able to find new buyers to replace the export volumes. Only because we have this high-grade market where coking coal being on the higher side is going to support us.
Okay, understood. So, sir, are you in dialogue with the government or something for this, or how is it?
See, of course, we have a pellet association at India level, so we have started a dialogue. We have it's always better to talk with numbers and data. So we have given certain numbers and data to the government, and hopefully things should get resolved soon. It's too early to say anything, but we have started a dialogue with the finance ministry and the commerce ministry at association level. Of course, not at individual level.
All right. Okay. Okay.
Yeah.
And sir, what would be the last one? What would be the current spot versus 4Q average? Current spot price of our high-grade pellets?
Current spot price of high-grade pellets is about 11,500 rupees going forward. The earlier cargo was sold about 12,500 rupees. So a reduction of probably 1,000 rupees we're expecting, looking at the current market scenario.
Sir, I'm sorry, I didn't get you. You're saying 11,500 currently?
Yeah, the order we are executing, the high-grade orders are, at 12,000 plus levels. And since we have booked till almost end of June, so, we have time to, correct the prices as required going forward. At the moment, we are very comfortable.
Okay. Okay, got it. Okay, thank you. I'll come back again if I have some questions.
Thank you so much.
Sure, thank you.
Thank you. Our next question is from the line of Prashant KP Kota with Dolat Capital. Please go ahead.
Sir, good morning and congrats for the good year in FY22. Sir, what we always hearing should not happen has happened. I think, sir, how the steel industry operates, steel sector operates is because it's in the same value chain. Exports, they do exports at some price. Right? That follows, so it's on pricing based on the international mechanism. But when it comes to domestic market, all the ferrous, non-ferrous, entire metals space follows import parity pricing. Sir. Similarly, even now if there is a duty, let the duty be there on exports. We will reduce the volume on exports. But domestic volumes, if we collectively work along with the iron ore industry, etc., the prices can be held up well. Sir. So where I'm coming from, I'll tell you. If pellet prices come down, iron ore lumps will come down. If iron ore lumps comes down, fines will come down. Again, if fines will come down, pellets will come down. So it's a vicious spiral. Somewhere someone has to lock it, sir. And if we take the first mover in terms of reducing price, we as in the industry, pellet industry, then iron ore will follow. Then iron ore lumps will follow, pellets will follow, the fines will follow, then pellets will follow. So somewhere somebody has to completely lock this, sir. So I want to know your thoughts and how to think about it.
No. So I unfortunately, I don't agree with the thought process because, everything, commodity means demand and supply. So, of course, everybody knows there is a pellet surplus in India. So, eventually, there will be a price fall. But, the only way, it has to look at is, when the prices has to go up, it takes a second for seller. But when the prices has to go down, it takes almost a day. So, the difference, the time gap which is required for the prices to correct takes some time, So eventually see, all the pellet buyers of fines will stop lifting the fines. So miners will come under pressure. Then they will revise their prices, So it's a cat and mouse game, It's all about being patient. Things will not happen overnight. So going forward, we have to wait and see how much prices go down, how much fine prices go down. So, it's a little complicated. So, but the patience is the only key I can say right now. It's too early to say anything about right now.
Got your point, sir. Sir, just one input from the steel side. Steel always trades at import parity, sir, in the domestic market. So some efforts from our side also, if you are not there, what is the other alternative that the steel mills have? Even iron ore, if Indian miners don't supply, they have to import. Then what is the pricing? Import parity. So somewhere...
eventually prices will correct, definitely. It is about matter of time. Nobody would like to, for example, miners. They would never want to, keep, mining and don't sell in the market, right? Even they are into the merchant mining. So eventually they will sell, they will carry the prices, but everything will be driven, by demand and supply. And things will take time, for a certain level of correction and for a certain level of stabilization. This was announced last week only. This is just the second week. So, let's be patient and see how the market corrects itself.
Understood, sir. Thanks for your time and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star and 1 on your telephone keypad. Our next question is from the line of Vikas Singh with Phillip Capital. Please go ahead.
Good morning, sir.
Good morning, Vikas.
Sir, while the prices would obviously take some time to readjust to the new reality, I just wanted to understand in last 1 week, how has the prices for our product segment has change basically?
See, there are no more major transactions in the pellet as of now in the local market. Everybody is busy and waiting and watching. So we are also supplying whatever ordered quantities are there. So the business continues as it is, and everybody is in wait and watch. But the finished steel, the prices have gone down to some extent. I think sponge iron prices have gone down to about 32,000. Billets have come to the level of 45,000. So prices have started falling in the finished market, and at some point of time, the prices will come down in the pellet as well. But we have to wait and watch.
Understood, sir.
Yeah.
And so my second question pertains to our 4Q volumes have been lower because of the mill was under shutdown. So have we been able to complete the maintenance and now it is up and running at full utilization, or still 1Q would also be impacted to certain extent?
No, I'll tell you. In fact, Q4 our production volume in sponge iron and billet, as I said in my opening remarks, were lower because of we reaching the EC limit. Our production capacity for sponge iron is 500,000 tons, and we reached that limit, so we cannot produce more than that. And our application for enhancement in the capacity, environmental approval is still pending with the state government. So we had no choice but to shut down. And if I've shut down the sponge iron, then the power generation will be lower wastage recovery, and I can't produce the billet at the grid price and sell it because it will not be economically viable and buying sponge iron from the market. So we discontinued the production in steel billets as well, and we took this opportunity for the maintenance of the plant. So maintenance were completed, and now plants have started functioning as normal.
Understood. Sir, what is the export prices of high-grade pellet, if you can tell us in dollar terms right now?
See, the last order we did was roughly about 12,500 rupees ex-plant realization, which was supposed to be delivered in June.
Okay. And whatever the orders we had, we don't have to pay duty on that, right? So that is the basic understanding, or there's still some confusion?
No. There is no confusion. So, unfortunately, whatever orders are pending, if it's for export, you have to pay the duty. There is no relaxation by the government. So, if we happen to export our pending order, which is supposed to be in June, then we have to absorb 45% duty and sell the shipment. So that's why I said
so that's our loss.
We are talking. That's what I'm saying. We are talking to the buyer. We have a long-term relationship with the buyer. We've been doing business with them since almost 3 years now. So even they understand the situation. So we are trying to find a solution where both are happy.
Understood. And so this Jagdamba Power purchase, we are paying that money for 66% of the pending stake, right?
No, because we are buying the plant on the slum sale basis. So we'll pay 70 crores to the Jagdamba Power, and going forward, we will either tender the share in the buyback to be announced by Jagdamba, whatever shares we have. And let me tell you and clarify, Jagdamba had given us this 26% shareholding at a price of 10 rupee per share in 2013 when we wanted to, and they wanted to supply us under the captive route. So, we are trying to find out a mechanism for that to tender the share to them.
So, are we saying that our effective price at the end of the day, because we have to tender certain shares, would be less than 70 crore? Is that a
slightly less than, because we had not paid the fair value at the time of taking this 26% shareholding. At 10 rupees per share.
So we would be tendering also at a very low price.
Yeah, definitely. I have to tender because this is an arrangement, mutually, beneficial arrangement was there. We did not want to invest money in 2013-14 when the, market conditions were there at that point of time.
Understood. And so just one last question in terms of our high-grade pellet versus normal grade pellet. If we had to shift this entire quantity to the domestic market, I just wanted to understand, is the propensity in the domestic market is more towards the cost and they would take a lower grade pellet and then we have to tweak our production? Or is vice versa, that high-grade pellet would continue to dominate the market and we would be slightly better off than rest of the players in the pellet players in the market?
I would go with the situation too. So firstly, the domestic market of pellet, which is based out of 63 FE, it's a commercial market which is driven by demand and supply. High-grade pellets, because we are the only company in India who's making high-grade pellets. So the target customers are totally different, which are bigger steel mills like Tata, JSPL, and all these guys. And they prefer, they give us priority because of the coking coal prices. Because of the better quality, the coke coal consumption in the blast furnace goes down, so it gives them added advantage in the steel production in terms of the cost as well as the production level. So both the markets are totally different, and we will continue to produce at a desired level. We will not be reducing any kind of production. That is for sure. We are confident we can sell whatever we produce.
Understood, sir. Thank you. Thank you for taking my question, and all the best for you.
Thank you, Ispat.
Thank you. Our next question is from the line of Sachin Kasera with Swan Investment. Please go ahead.
Yeah, good morning, everyone. Congrats for a good set of numbers. Regarding this high-grade pellets, can you just give us a breakup of it? Is it that last year the entire production and sale was high-grade pellets, or is there some breakup?
Abhishek?
To be honest, it's difficult to give you an exact number, but I can say with the current production volume, about 60-65% is our high-grade pellets, and about 30-35% is our 63 pellets. So 63 pellets are totally sold out in the domestic market. For the high-grade pellets, part of it is consumed in steel making, and part of it remaining is sold in the merchant market, being an export or domestic. Now it's going to be totally domestic till the duty matter is resolved.
Sure. And for our captive consumption, we have flexibility on both high-grade and the fine-grade pellets, or is it that?
Okay. No, so we have flexibility in both. Depending on the current steel market and the prices, we keep changing the combination.
And
ultimately, it's about the end realization should be on the higher side. Yeah.
Sure. And you mentioned that from what I could gather that you get around 1,005 rupees per ton premium when you sell high-grade pellets, correct?
No, that was the earlier case. So, when we started doing that, but now since we have a established brand in the domestic as well as export market, now we're getting close to 2,500 rupees a ton.
And in case so your target for the next year, in case you want to produce the entire quantity as high-grade pellets, is that possible for us? Technically?
Yes, going forward that is possible. For that, we need to ramp up a mining production for which we have taken certain measures. So this year it will not happen probably, but end of this financial year, once the mining production starts getting ramped up, we can shift towards 100% high grade, but not at the moment. It will take some more months.
Sure. And what is the difference in cost of production for you between the normal grade pellet and the high grade pellet?
Zero, absolutely zero.
So that incremental 2,500 rupees you are getting straight away to your EBITDA. That
Exactly. Yes.
Okay. There's one more thing that you mentioned, that the high-grade pellets are getting premium, and first, they are being preferred by the buyers because of the high coking coal rates. Now,
yes.
Going forward, assuming for whatever reason the coking coal prices were to correct, how would this impact the scenario for the high-grade pellets?
I think it's a very superficial, thing to comment at the moment, because I don't see any reason where, the thermal coal prices and the coking coal prices are going to come down soon. There will be correction, of course. It will go to 600, it will come back to 400 again. But no, what I know of the international market is, coking coal prices are here to stay for at least some more time. It will not happen overnight for sure. And same is the case with the thermal coal as well.
Sure. But just for my understanding, this premium that we get of 2,500 rupees, can that come down, suppose, for whatever reason? I understand you said the outlook is very strong, and that's what we are also getting a sense.
If coking coal goes from probably 400 to 200, then definitely the premium will come down. There is a direct relation with the coking coal. Because
that's the only thing I wanted to
produce. Yes, there is direct relation. So if the coking coal size goes down, then the premium should go down.
Sure. And now that the company has become debt-free, is there any thought process to improve the overall payout ratio, either via buyback or via dividend? So I think you've been giving 10-12% last 2 years, but now we have become completely debt-free. Do you think it makes sense that we should look now at a much higher percentage, say 20 to 30% of the cash flows to be paid out to shareholders, dividend and buyback? Any thoughts on that?
Yes, Sachin, this will be determined going forward based on what kind of profitability is there in the current financial year, number one. Number two, our CapEx plan, as to how much is the CapEx plan. We already have about 500 crore kind of CapEx in hand. We have some cash reserves as well. So that will get completed, and then based on that, we'll reduce, and if there is a surplus cash, we would be happy to distribute it to the shareholders.
No, sir, the point is that, earlier we had a lot of debt, and it was very much understandable that we kept the payout ratio as little low. Regarding capex, sir, we know it's a very capital intensive industry, so it's in our hand. We can do 500 crores of capex also, and there will be projects which we can look at 2,000-3,000 crores every year also.
So we have to make a balance between the growth and the distribution.
Yeah, but sir, that is one of the reasons for which can drive our re-rating.
Yeah, but
my humble request is that we should look at a higher payout ratio.
I understand, and I totally agree with you that the payout should increase as the profitability increases. But if you see, FY23 to 21, I think we had a debt. We utilized 100% of the money for debt repayment. We did not do even much capex. Now, capex is something, for debottlenecking, even solar, etc., which is critical in cost saving. We have taken up in the last year, and in Q1 we became the debt free on a standalone basis. Of course, with the disinvestment of solar project, we have become now net cash positive as well as the debt free on a consolidated basis. So definitely, I agree with you. The payout should increase, and we'll definitely aim to increase the payout going forward. And that will definitely depend on whatever is the investment in hand, and the surplus will definitely get distributed.
Yeah, and I would also humbly request that we should consider a buyback, considering the correction in the stock price and the type of cash flows we are looking even at the post the correction in the pellet prices. I think the board should seriously evaluate a buyback.
Definitely, point is taken, Vikas, and we'll definitely take it forward in our board and assess the situation. Let the market cool down first because of this, the entire, and therefore I'm not able to commit anything at this point of time.
Sure. Thank you. I have some more questions. I'll come back in with you.
Yes. Thank you.
Thank you. Our next question is from the line of Aman Madresha with Augmenta Research Private Limited. Please go ahead.
Hi, sir. Thanks for the opportunity. So given that you said that currently over the last 2 quarters we have not exported pellets, so I just wanted to know what was the peak export number in pellets in any previous year, if you could help me with that.
Maximum 2 consignment. Okay, Abhishek, you go ahead. Yeah.
No, he's saying about the price, not the volume. So the peak price. Sorry.
I'm talking about the volumes, like what percentage of the pellets you exported during the peak period? Like?
Okay, so, when Corona had just come in, so, the steel production in India was quite down and the consumption in domestic was down. So we were exporting about 1 lakh, 2 shipments every month, about 1 lakh a month.
Okay. And currently it is 0, right? The exports of pellets?
No, so it was down to 50%. We were doing 1 shipment a month, and going forward it will be completely 0 till the duty matter is resolved.
Okay. And given that, like how is the export opportunity for billets? Like, is there an export market for billets? Given that there's no export between billets, like.
Yeah, so we have exported some volumes of billet in last couple of years. And we are always in touch with our, esteemed buyers. So if there's an opportunity for export and we think the realization is better than the domestic market, we will export. We have done that before as well, and we'll continue to do so.
So, like, out of the total billet, like full volume is exported, or it depends on the market situation?
No. The volumes are very, very limited because we have a very good domestic market. The reason being, since the pellets are, high Fe, the phosphorus content and the sulfur content is quite low. So, we get a premium in the domestic market because of our quality. So, for steel making, you use the same pellet and the same billet gets sold in the market. So, we have a very good market for that. So, as such, we have no issues in terms of our sales in the domestic market.
Okay. Thank you.
Thank you. Our next question is from the line of Raj Shah with Satirus Capital LLP. Please go ahead. Mr. Raj Shah, your line has been unmuted. You can proceed with your question.
Hello, I am audible?
Yes.
Yes, please.
Yeah, hi. Congrats on a good show. I have some bookkeeping questions. I understand that the realization for the Ardent Steel is fairly less, for pellet. If you could just throw some light on the same.
Yeah.
No, see,
Go ahead.
No, I think the realization is not quite low. So see, Ardent is in the Odisha market where they're making a 60 pellet, which is the benchmark in India. So, as I said earlier, everything is demand and supply. And please understand, sometimes there is a transitional phase where, the market corrects on the finished side, but the fines doesn't correct at the same time, So there is always a transition period. So probably that's the reason why Ardent realization is a little on the lower side compared to previous quarters. Otherwise, there is no other reason. It's just a market correction, nothing else.
Okay. And, we're studying 3 power projects, solar power projects. What would be the entire cost for the same, and if you could just quantify the cost savings?
3.5 crore per megawatt. I think complete detail is available in our investors presentation, how much we have invested, how much is the total cost, and what is balance to be invested in the current year.
Okay. And it will be operational by the entire project?
Yeah, one project, 70 megawatt, is expected in, very soon, I would say. It is just awaiting the synchronization with grid, and rest 2 are under, construction. So by Q3 and it will get commissioned.
Okay, good. And just last thing, I would concur with what Vikas said on this. Board could think on the buyback. With the sudden drop in the share price, it would, really, help the minority shareholders as well.
Sure, definitely. We have noted that point, and we will take it forward.
Thanks a lot, and all the best.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, please restrict 2 questions to 2 per participant. Our next question is from the line of Siddharth Agarwal with Prudent Value Partners. Please go ahead.
Good afternoon, sir. So my first question is regarding our iron ore. So we have reserves have gone up to almost 165 million tons now. So could you just let us know what is there an expected increase in cost of extraction from these reserves depending on how these reserves have been located? So this quarter our cost of production was roughly 2,800 rupees per. So how do you expect this to pan out for the new reserves that we have identified?
Yeah, I got your point. With the increase in the volume in the mining, the cost should proportionately, because of the operating leverage, cost should go down. Cost is also at elevated level because we pay the royalty on in the IBM price. And because of whatever announcement in terms of export duty the government has done, which will reduce the iron ore prices, and therefore IBM prices will fall. So that will also result into some fall in the royalty payment to the which we are paying on our iron ore mining. And of course, some reduction has been given in the petrol and diesel prices, which should have some minor impact on our transportation cost as well.
Okay. And so could you also speak a little bit about what is our cost of pellet production today per ton, and how are we placed vis-a-vis our competitors, and who are merchant, not using them for factor?
Since we have the iron ore coming from a mine, so there are 2 costs. One cost is the iron ore cost, which is quite low compared to our peers because of a captive iron ore mining. On the operating cost side, currently our cost is about 1,600 rupees a ton.
Okay. So our cost is iron ore plus 1,600. Iron ore plus 1,600.
Yeah. So from iron ore mining till you can say pellet production, the cost is somewhere about 5,500 rupees a ton. 6,000 rupees, you can say on the higher side. 6,000 rupees.
6,000 rupees. Okay.
Yeah. But it will go down because as Dinesh just said, so the royalty portion will start going down in the future. There is a correction in the diesel prices. So both there will be impact to a certain extent. So going forward, the cost should come down.
Okay, great. Thank you.
Thank you. Our next question is from the line of Sarvanan Balakrishnan with Sarva Capital. Please go ahead.
Yeah, thank you for giving me the opportunity. Just wanted to understand about the new steel capacity capex that's been going on, like for 2 million tons. Could you give an elaborate answer on that, like in terms of like when we expect to sort of go, like keeping the current scenario? And the second one being is primarily on the one query that the earlier participants have also asked, like in terms of the dividend payouts, like any reason like we will expect to like sort of again improve on that, like we're heading to sort of again 30 to 35% of that.
Abhishek, you'll take this?
See, on the dividend payout, Dinesh ji already mentioned, we need to strike a balance between, the free cash plus the capex as the industry will also grow. So your point is well taken. We will definitely discuss among the peers and among the management and the board, and we'll take a decision call accordingly. On the steel side, the future expansion has been kept on hold for two primary reasons. One is we are waiting for the sponge iron EC to get clearance, because a lot depends on the sponge iron EC. Because if we expand the capacity and we don't get the permission of sponge iron, then we won't have the raw material to feed to the steel making capacity. So there will be a big bottleneck. We are hopeful we'll get the consent of sponge iron in this financial year. So once that is cleared, we will move ahead with our steel expansion. And second was, we have taken a turbine project where we are replacing, we have also mentioned this in our presentation, we're replacing the old efficient turbines with a new efficient one of 40 megawatt, which will give us additional power of about, 10 to 12% with the same steam generation. So when these two things are clear, then we will go ahead with the expansion of steam. Because without these two, we won't be able to feed the furnaces to produce more steel.
So what is the IRR and cost of capital for the steel expansion?
See, the IRR now, the entire scenario is changed. What Abhishek is talking about is whatever is the debottlenecking capex, which we are doing it in the existing plant. So far as, and I think your question was with regard to the fresh investment at the greenfield project. We want to do and start with an investment, but for that we have filed an environmental approval. We are still awaiting the approval for the land acquisition from the government. And once these two things are decided, and then we will do a viability workout based on the prevailing scenario. Till then, that large project is kind of hold. The FY23, there is no investment is going to go in that project except some money if required for the land acquisition. And the project will be reviewed. Yeah, will be reviewed in due course of time.
Got it. So one last question, sir. So like once the new plant goes live, so what will be the average time it will take for the new capacity to go above 80-85% utilization?
The existing plant.
No, the new plant. New plant
is, we'll give you more details when we are able, we are, closer to the investment schedule. As of now, it is in approval stage and etc. So we'll give you the guidance on that, but in FY23, except land acquisition, if it is approved, then that will be there. No more capex on the new greenfield investment in FY23.
All right. Thank you so much, sir. And good luck.
Thank you.
Thank you. Our next question is from the line of Viraj Nahar with Milli Consultant. Please go ahead.
Thank you very much, and congratulations on excellent results.
Thank you, sir.
One particular point that you mentioned about that coking coal will come down because of use of high grade, and efficiency of the blast furnace will also go up. So the percentage of iron in your pellet is already higher by 3 to 4% compared to the normal grade. So does it mean that you get roughly about 2,000 rupees per ton advantage on getting the higher yield? And 5% coking coal product cost come down. That's what it is. Other sale and other people have been talking about it. So there is a huge advantage of using the high-grade pellet. So can you throw more light on that cost saving on their part, and how much can it be sustainable on a longer-term basis to the extra realization which we are getting?
Definitely. See, so yes, Government of India has reduced the import duty on coking coal to 5%. For example, today coking coal prices are hovering around $500. So by $25, their import cost will go down, which is about, you can say, about 2,000 rupees a ton, right? So which is a little contribution on terms of cost saving for the import players like the bigger steel mills. On our side, we get a better realization because of higher Fe. The gang input in the system is less, which is basically silica and alumina. And with lower alumina, the coke rate in the blast furnace goes down. So whatever discussion we have had in an internal discussion, the numbers we've got is with our pellets, they are saving around about 4,000 rupees a ton in the blast furnace in terms of the input cost, which is primarily the reason of coking coal going down, and the slag volume also goes down. So these two comprises, they are saving around 4,000 rupees a ton. So that is why they are able to pass on a margin of, say $30 to us. So, it's beneficial to both the parties.
Okay, sir. Thank you. One more question is that in our own, we are buying the coal from Coal India under linkage, or are we buying on the auction? And what is the impact actually now if we are buying from the auction, because prices have gone up very high in the auction also?
Yeah. And unfortunately, because of the Russian war, I think globally there has been impact on the energy side. And even, we are impacted in India as well. So we have linkages from Coal India. There has been a slight delay in terms of the deliveries, but they are trying to, cover up the gap to a certain extent. And for a sponge iron, as we said earlier, we are totally using the imported thermal coal. We don't buy from the open market. And for the Coal India linkages, it's mainly going to our power plant. So the impact on the domestic supply is not very high when it comes to Godawari.
Just regarding your biofuel-based power plant,
No.
Sir, also whether cost has gone up for purchasing the biofuel in your area?
The cost, if you look, biofuel is, it's mostly a seasonal commodity, right? So, post Diwali, the average price till now would be around about 3,000 rupees, which is quite reasonable compared to the coal prices which are in the market right now. And there is sufficient supply of biofuel in the market. So that is one thing we are doing with the financial saving on that side compared to coal.
Okay, sir. Thank you. All the best, sir.
Yeah.
Thank you.
Thank you. Our next question is from the line of Vikas Singh with Phillip Capital. Please go ahead.
Hello.
Yeah, Vikas.
Thank you for giving me opportunity again. So just wanted to know, with Jagdamba Power merger with ourselves, do we envisage any cost savings also, or it won't be coming?
Because the power which we are getting from Jagdamba currently is cost plus certain margin to Jagdamba. So whatever is cost will continue to get incurred. But if I compare this with my grid prices, then it is 2.5 rupees cheaper price on a production volume of about 15 crore unit annually.
And just to add what Dinesh said, Vikasji, since the Indian government rule says that if it's an IPP, so then you won't get a credit of GST, the input credit. But when you merge with Godawari being the manufacturing, so we will save on 5% GST on the input coal side and 80% GST on the services side. So there will be an additional about 6 to 6.5% saving on the operating side as well because of the merger with Godawari.
Understood.
So straight away adds to about 30-35 paisa on an annualized basis per unit.
Yes. And so just one last question. Our blended coal cost, how it is moving in 1Q over 4Q? Or what kind of the cost inflation we can expect?
You talk about Q1 versus Q4?
Yes. Q1 versus
Q1
Q4.
FY23, Vikas, right?
Yes, sir. Yes, sir.
Yes, so going forward, we don't see a substantial difference in terms of pricing because we had hedged our cargoes at a very reasonable level. So my Q4 cost, average cost of thermal coal, and Q1 there will be a difference of probably say 10-15% maximum. So we are not very much impacted by this coal crisis.
But then your cargo would have hedged up to certain point, right? Beyond that, if coal cost remains higher, then that cost would hit us because we use imported coal for a sponge.
So we have
just wanted to know this higher cost, when it is going to hit us, this higher cost of production.
That's what I'm saying. We are at the moment we are very well covered till next 3 months, which is June, July, August. So September we still are uncovered, but I think September is too far away to think right now. Because the market is very volatile, the prices are going up almost by 20-25%, on week basis. So for the next 3 months we are very well covered, which I think it's a good decent level of hedge quantities we have. So Q2 will not have a very substantial impact on the coal prices.
Understood, sir. Thank you for taking my questions again.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, please restrict to one question per participant. Our next question is from the line of Jatin with Investor Savvy. Please go ahead.
Congratulations for a good set of numbers. So my first question is that, so can you share some idea about your revenue breakup for financial year 22 in general, domestic and export in general, percentage-wise?
Sorry, come again, please.
Dinesh, he wants to know the revenue of export versus the domestic supply.
Revenue, I don't have, frankly, the numbers readily available, but export close to about 600,000 tons of pellet at an average price of 12,000 rupees a ton.
So you don't have a percentage-wise breakup right now for FY22?
Right now we don't have the percentage. I can tell you, after, or you can get in touch with Sana in our investor relation. We'll provide the data and she will give it to you.
Okay, sir. And so my second question, sir, in your
your voice is not clear, frankly. Your voice is not clear.
Sir, am I audible?
No, not clearly.
Hello, am I audible? Better?
You are on hands-free or what?
No, sir, I'm on hands-free, sir.
There's a disturbance in your call.
1 second, sir. Sir, is it better right now?
Yes.
Sir, my second question, in Q4, there is some exceptional gain of 124 crore. Sir, can you throw some more lights on that?
Exceptional?
Exceptional gain. Exceptional item gain.
98 crore. It is not 98 crore, not 134 crores.
Yeah, sir, can you throw some more light on that?
That, as I said in my opening remarks and earlier announced, we have gained this amount on the sale of our stake in our 50 megawatt solar power IPP, that is Godawari Green Energy. We have divested 100% stake in that company.
Okay. Thank you, sir.
Thank you.
Thank you. Our next question is from the line of Shamant Bhardwaj, an investor. Please go ahead.
Congratulations on the great set of numbers. I just wanted to ask, there's around 270 crore of loan on the balance sheet. Who is it given to, and is it a related party transaction?
No, it is not a related party transaction. Some short-term advances have been given to certain parties, and this is on demand, revert back on demand.
Is it secured?
Secured in the sense it is unsecured, but we have high confidence on the parties.
And while calculating working capital changes, you have included other non-current assets and liabilities. Why is that?
Sorry, come again.
In the cash flow statement, while calculating working capital changes, you have included other non-current assets and liabilities.
We have calculated other non-current assets in the liability side. Frankly, I will have to recheck it, and then can you tell me, or can I separately give you the clarification on this?
Yeah, sure.
Yeah. Sana, Sana will get in touch with you.
Okay. Thank you, sir.
Yeah, thank you.
Thank you. Ladies and gentlemen, due to lack of time, we will end the question and answer session. And I would now like to hand the conference over to Mr. Dinesh Gandhi for closing comments.
Once again, thank you very much on behalf of the management of Godawari Power for joining the Q4 and FY22 earning calls. We'll continue to be happy to answer all your queries. You can get in touch with us or our investor relation agency for further clarification, if any you need on the results or the operations of the company. Thank you, and thank you all.
Thank you.
Thank you.
Thank you very much. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you very much.